Good bookkeeping isn't something that's taught in school. It's taught here. And after managing the bookkeeping function for tons of fast-growing companies, I'll be walking you through how to set your business up with the right foundation for bookkeeping. We'll be going over how to classify your transactions in an accurate and efficient way, how to reconcile all these scary accounts on your balance sheet, and finally, how to present your financial statements in a way that will wow your audience. Oh, and we'll do all of that using one of the most popular accounting tools out there, QuickBooks Online, along with some other really neat automation tools like Ramp, who is nice enough to sponsor this video. So let's start with, first, what exactly bookkeeping is. See, these are financial statements. They are the way in which you can understand what's happening financially in a business, much like how a doctor understands what's happening with your health via a lab result. And every business needs to produce financial statements, but many people don't know how to prepare them correctly. More important, efficiently. And that's where proper bookkeeping comes into play. And if you want to become a controller or a CFO or just a better business owner, you'll need to know how to do this right. And it all starts with ensuring you have the right foundation in place. I once had a client hire me to clean up his books. Great, I said. Can you send me your bank and credit card statements? And he then sends me over his credit card statement, like his personal credit card statement. And I was like, thanks, where's your business credit card statements? And he was like, oh, I don't have that. I just run that all through my personal card. And I was like, oh boy, this is gonna get interesting. If you're not setting up a separate legal entity for your business and running all of your business transactions through specially created company accounts, the government won't really like that. See, businesses get tax deductions for business expenses, and they also get certain types of protection, say, if you get sued. The idea is that you should be able to separate your business's assets from your personal assets. But when you have both business and personal transactions in one account, it's kind of hard to make the case that your business is too different from your personal life. It's what's known as piercing the corporate veil. But it's not just the government that won't like it. Your bookkeeper won't like it either, because there's so much more work now involved in tracking down which transactions were personal, which were for the business, and then you need to trace all sorts of receipts to prove these transactions are even real. When you have a business bank and credit card in the name of your company, this all becomes a breeze. And nowadays, you have companies like Ramp who allows you to create a virtual account or credit card for your business. Share it with someone in your company with a spending limit of, let's say, $100, all in a matter of seconds. There's no excuse to be putting business expenses on your personal cards. So once you have your business account set up, you'll need to choose an accounting software. Yeah, this is one of the few times that I would advise against using just a spreadsheet. Though don't worry, we'll be having a ton of fun with spreadsheets in this video. But with an accounting software, everything is just so much more streamlined. You can run all sorts of reports like a profit and loss or a statement of cash flows. But more importantly, it just automates so much of what you need. You can automatically feed in bank and credit card transactions. You can book adjustments, and you can download pretty much whatever you'd like. Now, for my fractional CFO business, our clients mainly use QuickBooks Online. And no, QuickBooks is not sponsoring this, but I kind of wish they would with how much I'm about to talk about them. Because QuickBooks is one of the cheapest online tools, and it's what pretty much all the small businesses use. Now, it's not a full-blown ERP, which is more like a robust accounting platform that businesses oftentimes don't get to until they need to worry about things like consolidating financial statements. But that's good, because ERPs are oftentimes tens of thousands of dollars. QuickBooks is really cheap. So once you have your accounting software in place, you need to decide on two important things. First, do you know how to read this? It's a profit and loss. So let's say you're selling iPhones. Each time you sell an iPhone, you'll see amounts in your revenue go up. This is your income. Then your cost of goods sold would be the cost to produce and deliver each iPhone. Your operating expenses would be the cost to house those iPhones, like rent in the iPhone store or the people helping the customers when they walk in. And then other income or expense is pretty much non-standard business expenses or income, like interest on a loan. So let me ask you a question. What would happen if someone called you and was like, hey, I want to order an iPhone for $1,000? And you were like, great, but heads up, there's a delay and we won't be able to ship it to you for another 30 days. And they're like, sure, no problem. And then they pay for it right then and there. How would this show up in your financial statements? Well, I just told you that revenue is income. So we should record $1,000 in income, right? Well, yes, but also no. See, it kind of depends. Companies can produce financial statements under the cash basis of accounting or the accrual basis of accounting. When a company chooses the cash basis, that means that they'll record income whenever they actually receive the cash from a customer. So in our example, yeah, I'd record $1,000 in revenue. I received that money. And the same is for whatever I buy. I'll record an expense whenever I actually pay for it. Well, the accrual basis, it's a bit different. The idea here is that you only record income when it's actually earned. Meaning you wouldn't record revenue when you got that phone call. You'd record it 30 days later when you actually delivered that iPhone. And you would set up a liability account called deferred revenue until you actually deliver it. So your first step is to choose, are you going to use the cash basis of accounting or the accrual basis of accounting? The general idea is that small businesses without outside investors or really heavy business activities opt for the cash basis because, well, it's just a lot easier to produce financial statements this way. You pretty much just need your bank and credit card transactions, which you're recording separately, right? And then you just categorize those transactions in your accounting software, which you have now, right? Under the accrual basis, you gotta study the contracts and agreements to get the details on when you actually earn that income or consume that expense. Then you gotta book journal entries. It makes everything 10 times more complicated. But here's the deal. The accrual method of accounting is the real way to understand what's happening in a business instead of just cash movements. And that's why public companies don't actually have a choice. They need to use the accrual basis. And if you really wanna grow in your career as an accountant, understanding how to close the books under the accrual method will be an amazing skill set to add to your career. So for the rest of this video, we're gonna be doing things under the accrual method. But this last point may be the ultimate factor in producing your financial statements. Here, look at these two tables. Can you tell me what's happening here? Well, yeah, this pretty much makes sense. I can see we're selling iPhones, now subscriptions, and then we're spending money on advertising, great. And now what about this report? Can you follow what's happening here? Well, we have an other business expense account and I don't see why we're spending money on hairpins, even though it's pretty minimal. This is pretty frustrating and I'm gonna now give you a call to ask what this all means. And that's because you didn't set up your chart of accounts correctly. Your chart of accounts are the accounts that show up on your profit and loss and balance sheet. Now, I have a full video on this, so I won't go into many details, but I will say you want to strike the balance between detail and summary so that the readers of your financial statements can comprehend what's going on. And now that you have your business set up, let's kick off our first step in the month-end close process. Getting our source transactions ready. Your credit card gets charged. You receive a bank deposit. A contract gets signed. These are all things that can now affect your financial statements. We call these business transactions. And transactions can be actual transactions that flow in your credit card and bank account, or it can be a bill that you receive from a vendor or an invoice that you send to a customer. The key is to automate getting these transactions into your accounting software with as little effort as possible. So I once was hired by this client who had a bookkeeper already working for them. And they said, Josh, we don't know what to do. Our bookkeeper is so inefficient. It takes him ages to do even the simplest task. So I met with the bookkeeper and I asked, how do you get your, let's say, credit card transactions into the business? And he goes, oh, that's simple. I just go to the credit card's website, I check if a transaction has been posted, then I enter a new transaction and just copy and paste all the information from my bank into my accounting software. And I was like, why don't you just utilize the live feed? And he was like, live feed? And I was like, yeah, one of the best parts of an accounting software is your ability to sync transactions in real time. That means it'll all be ready for you to classify and get into your financial statements. And many accounting softwares allow you to create both bills and invoices easily in their system, making it easy to keep everything in one place. But sometimes you'll want to streamline that by receiving a bill, let's say in your inbox, and just forwarding that directly from your inbox. And that's one of my favorite things that you can do with Ramp. You get a custom email, you simply forward the attachments directly to that email, and then it'll sync with your accounting software using AI to pull in all the details automatically. And once everything is synced, you'll be able to move on to your next step, classifying. Here I have all my transactions for all my bank and credit cards. I can change the classification to any category, which determines how it will show up on our financial statements or chart of accounts, as we spoke about earlier. But it's not just categories. It's the vendor or customer name. I could add a note, or I could even choose a class, which can be the department or business unit. And this is where I could also upload any helpful attachments to transactions to keep a proper auto trail. So I like to categorize these transactions as quickly as possible by sorting on description and classifying in bulk. And like we spoke about earlier, if I have a Ramp credit card, Ramp will actually do a lot of this work for me, saving me tons of time by automatically classifying all of my transactions accordingly. And then when I'm done, it'll sync this information right back to my accounting software. And now that we have our transactions classified, it's time to reconcile them. Reconcile. Cause to coexist with one another. Make one account consistent with another. Bingo. That's what the reconcile portion of your month-end close is for. It allows you to confirm the balance of any account with the balance shown somewhere else. So for example, you reconcile your cash shown on your balance sheet with the bank balance shown on your bank statements. And then we do the same thing with credit cards. We call those bank reconciliations. And they're absolutely crucial to a month-end close. Because you see, without it, we don't really have proof that our cash balance is accurate. Now, I have a whole video on how to do bank reconciliations, which I'll link to below, but I'll first just explain how to do a bank reconciliations. It's actually really simple. You go to your bank or credit card's website, you download the statement after the month ends. Is that why they call it a month end? Then you enter in the ending balance on your accounting software and push all the transactions that you categorize through. And here's the key. These transactions should cause your financial statements to show a bank or credit card balance that matches exactly to your statements. And if there's a difference, you should have the full story on why. Like maybe a check that hasn't cleared, or maybe that hit your credit card statement but shows up a day later in your accounting software. Those reasons are okay. Want to know what's not okay? A missing transaction or a duplicate transaction. But bank reconciliations are just one account on your balance sheet that you need to reconcile. The entire balance sheet should ideally be reconciled. The most popular accounts are prepaid expenses, inventory, accrued expenses, deferred revenue, depreciation, and a few others. Now, I actually have a full video on these accounts that you can check out over here, but first let me share a few notes about how to reconcile these accounts. See, every balance sheet account balance that you see is cumulative. That means if your Q2 ending balance for inventory was $300,000 and your Q3 ending balance was $400,000, you had a net increase of $100,000 during Q3. That's because all balance sheet accounts follow the base framework. Beginning balance plus additions minus subtractions gets you the ending balance. So let me show you how to reconcile deferred revenue in Excel. So here we have our customer details. I'm gonna set up a basic calculation that analyzes the month that we're in compared to the month of the transaction and divides it by the amount of months. So now my beginning deferred revenue balance is this, then it gets increased, then decreased till it eventually goes to zero. Now, I'll go to my accounting software and I'll enter in what's known as a journal entry, which showcases the debits and credits of my accounts, and I'll repeat these steps for all accounts across my financial statements that need adjustment. And now that you have all of your journal entries booked, it's time to finalize your books. Here's where you get to step back and see the forest beyond the trees. And it's not too hard to do this like a controller would. I like to start with my profit and loss. Are there any values in, let's say, your operating expenses that look like either a lot more or a lot less than the prior month? Or maybe there's an amount missing entirely, which you know can't be correct. People call this flux analysis or horizontal analysis. Now, you can also do what's known as vertical analysis, where you calculate and analyze margins. For example, last month, my gross margin was 86%. This month, it's only 72%. Something may be off here. From there, I can drill into each transaction and understand whether I have a misclassification somewhere, or if I just need to make a note that, hey, this month was a special month. This is also a good idea to confirm that the balances shown on my balance sheet match to my backup schedule that I have in Excel. And once I have that complete, it's time to publish. But here's where I see a lot of people make mistakes, which is actually what I used to do. See, I used to just export my financial statements from my accounting software and then send them to the CEO or to the client. And they'd pretty much just sit there and see a ton of data and not really know how to make sense of it. Which is why I then changed my approach to instead share dashboards and summarize reports like this. Now, I could understand what's happening to my business at a glance, and I could also see how that compares against prior periods, or my budget, giving me quicker insights than with this lengthy report from my accounting software. And I do that by using this plugin called Model Wiz, which gives me access to my QuickBooks information and can transform it into tons of beautiful dashboards like the one you see here. And this isn't some random tool, this is actually our tool that we developed after years and years of development to allow you to easily see what's happening in your business and get insane credibility with this beautiful design. You can grab this at modelwiz.com. But once your dashboards and reports are generated, you're not done. You have one final step. Now it's time to present your findings. And don't take for granted that whoever you're presenting this to may not know as much about finance and accounting as you do. For example, the CEO may not have an accounting background and understand why the revenue is different from the booked sales. Or maybe you're presenting this to someone else in leadership who doesn't really understand what a balance sheet is and how it differs from a profit and loss. It's your job to inform them. Tell a story of your financial activity. Explain it like a doctor would explain to a patient that they're totally healthy, but they should monitor a few areas of their health. Explain how this information compares against what was forecasted, or how it compares against last year, which can be especially valuable if you're running an e-commerce business with seasonality. And once you do that, you can pat yourself on the back as you just close your books, but don't sit for too long. Before you know it, the month will be over and it'll be time to repeat this exact same cycle. That's why I like to do a lot of this work in real time or as close to real time as possible, so that when the month officially ends, all the statements are generated and I don't have a huge pile of work to finish. I just need to put the finishing touches and repeat the cycle. But proper bookkeeping is just one aspect to a company's finance and accounting function. And if you made it this far in the video, it's clear that you're pretty serious about growing in your career in finance and accounting, which is why I suggest that you watch this video, which will walk you through the 3 financial statements and how they're all connected, which is a huge part in your career in finance and accounting. I'm Josh, your CFO guy, and I'll catch you next time.